Our next panel topic is what role does security compliance play in having Wall Street invest in cannabis? And I'm very proud to say that a friend of mine, John Nemanic, who is a partner in Green Coast Capital, will actually be moderating this. And before I do John's intro, John, hola, ¿cómo está? I
Muy
believe
bien,
you.
gracias a usted.
Bien, gracias, mi amigo, gracias. So John does a lot of work down in South America, specifically Colombia. John's a partner in Green Coast Capital Investments. Green Coast is an international investor providing flexible and innovative financing to the small cap and micro cap marketplace in a variety of sectors. His team consists of experts in capital markets making quick decisions to provide growth capital to issuers. John is a serial entrepreneur and an investor. He was a co-founder, chairman, and CEO of three very successful internet startups. The first one was in 2006. We raised over 29 million and then sold it to Deluxe Communications for over 124 million. He also had a couple other groups, which he sat here and was able to sit here and increase their market cap to over $600 million. And in 1999, his internet direct company was merged with Look Communications for a deemed value of $560 million. So everyone paying attention, John's the real deal. He knows what he's doing. His current interests are medical cannabis, cultivation hemp, CBD startups with a focus, and I repeat, a focus in Colombia. He's married to Dr. Sandra Carrillo, a leading expert in cannabis for clinical applications, and was appointed the clinical professor in charge of the scientific program for cannabis research and education for the Faculty of Medicine at the University of Panama. John manages Panamanian and Colombian-based companies. He's a former member of EO Panama and has extensive contacts within Panama. He was also a former member of EO in Toronto. And right now, he's really looking for high return opportunities to invest in to serve as a director for high quality cannabis related firms. Everyone, John is an entrepreneur, an investor, both domestically and internationally, and he understands the medical component to this side of the medicine as well too. John, thank you for moderating today's panel. The floor is yours.
Thank you, Dr. Dave, for a most wonderful introduction. I think I should leave now on this high note. I mean, it's not going to get any better. Anyways, I never cease to be impressed by the quality of the speakers. John Thompson, Matthew Norgren, thank you for your insights. It's extremely valuable. And Matt, in particular, your commentary reminds me of many years past when I worked as a manager at the Bank of Nova Scotia mid-market accounts. When it came to granting loans, we had two questions. What do they want? And how can we say no? Needless to say, I got sick of being in banking after a couple of years, but it was a great experience. Anyways, I'd like to start by introducing Ted Bernhardt, Managing Director, Cultiva Law, and Kevin Albert, Independent Director, NorCal Cannabis Company. Ted, please give us a 1 to 2 minute introduction. Ted, take it away.
Yep. Thanks for the intro. It's an honor to be on the panel here today. My name is Ted Bernhardt. I'm the managing partner for Cultiva Law. We are a cannabis dedicated business and finance law firm that is based on the entire West Coast of the United States here. We have offices in Seattle, Portland, where I'm based, San Francisco, and Los Angeles, and are gradually expanding eastward. And so our firm is focused on helping entrepreneurs raise capital and get into the industry and structure their transactions in a legally compliant manner. My background is I've been doing this since since about 2015. Before that, I was in the technology spaces and energy spaces, and I actually acted as a general partner of 4 different venture capital funds before I started practicing law. So anyway, it's an honor to be here, and thanks for the introduction.
You know, I Googled your bio, and you were Portland's Business Journal 40 Under 40 Award, given the most accomplished, influential, and civic-minded executives in Portland. Just want to say, good for you. And you know what? You have the type of bio we could spend 20 minutes just discussing your accomplishments.
That's really nice of you to say. Yeah, it's an honor.
It's just the truth. So on to Kevin Albert. Kevin, please give us a 1 to 2 minute introduction.
Sure. Thank you, John. And I'd like to find out how you guys got those screensavers behind you. All I have is a picture of people laying on a beach somewhere. So my name is Kevin Albert, and I guess I have a very institutional background, so it's probably quite appropriate for this panel. I spent the first 24 years of my career as a banker at Merrill Lynch. And for most of that time, I ran the private placement group, which both raised funds for private equity firms, general purpose private equity firms, and it raised money for emerging growth companies like the companies in this industry, albeit bigger size deals than many of the placements that get done in this industry. I then subsequently, after leaving Merrill Lynch, I worked for 2 private equity firms. And I retired in December 2019, just in time to be locked down and stuck at home during COVID. I started investing in this industry in 2016 on a personal basis, both because of the dynamics of the industry and because, I know my limitations, and I'm not ever going to be a successful venture investor in healthcare or AI or any of these highly technical things. But this is basically a consumer industry. I'm a consumer. I know what I like. I can make assessments as to what other people like. And, it was sort of my view that by investing in this industry, you knew the product worked, you knew people would buy it, and the only question was the management teams and their ability to execute. And I think that sort of enters into this topic because it's really all about the management teams, both in terms of execution on the business plan, but also in terms of setting up compliant companies that have good corporate governance. And as in any emerging industry, that typically isn't the case in the very beginning. In the very beginning of any industry, but particularly this one, which was federally illegal, you find that many of the companies were founded in the early days by dreamers, by entrepreneurs, by people who had been black market cultivators or black market distributors. And they are probably the best people to have spawned these industries, but they're probably not the best people to get the attention of Wall Street ultimately. And because they don't have the background. It's not that they're not smart and capable, they just don't have the background of having, come up the ranks. So that's my background. I'm on the board of 3 California companies currently, 1 public one, Harborside, and two private ones, Locana and NorCal, and I'm on the advisory board of one of the industry funds.
Again, I also Googled your background, Kevin, and I noticed, for example, that you're associated with Harborside. I actually participated in the most recent private placement with Harborside. Well done, good work, So I just wanted to declare that if anybody sees that as a possible conflict of interest.
No, we're aligned. We're aligned.
Well, of course. I mean, to be frank, for open disclosure, I'm probably I haven't counted recently, but probably at 8 different private placements just in my own personal accounts, plus what I'm doing also with Green Coast as well. So, anyways, gentlemen, I'd like to open up with the following questions, and we'll ask both of you. So I'm going to ask the question, and both of you, I'd like you to provide your perspective on this. And Kevin, you've already sort of segued nicely into investing into the risks. And what I'd like to do is open with the following. So during my early forays into cannabis investing, I thought I understood regulatory risk, and I was wrong. I underestimated, for example, just how challenging it can be to stay on side. How do you manage regulatory risks as a director with the companies you're associated with? And tell us why it is so important, because I believe there are some people who are not familiar with what the challenges of regulatory risk are and how that can really, really put holes into their aspirations.
Which one? I don't want to
let me rephrase. What do you see as how do you manage regulatory risk? What do you do with your entities? Like you're saying on the board of Harborside.
Yeah, so, okay, so in my opinion, well, first of all, as a director, you can't actually make it happen in the company because
Right.
you're a director, you're actually supposed to be supervising management as opposed to doing things yourself, because if you do them yourself, there's nobody overseeing you. And that's one principle of good corporate governance. So what is important for the directors to know is it's important for them to know the regulatory regime, what the key rules are, what the regulators are focused on, and then to employ good compliance people or a person, depending on the size of the company, and to ensure that that person, has a game plan for addressing those issues and does it, and to evaluate that on a semi-annual, a quarterly basis, sort of depends again on the size of the company. The best example of the downside of not doing that is a company called Lowell in California, which is a branded flower pre-roll company, which got caught, I think, about 18 months ago, operating out of an unlicensed facility. They were licensed. They had all the license they needed to do to prosecute their business, in general. But for some reason or other, they decided to cut a corner and operate out of an unlicensed facility for a period of time. And it went from being probably the hottest brand at that particular point in time to a company that became quickly distressed and just recently had to sell itself at a fraction of what its value was back at that particular period of time. Because who's going to invest? All of these companies need a continuing flow of capital to come in to grow, and who's going to put money into a company that has a breach like that when really most of the other companies don't. Most of the other companies are compliant. I mean, the regulatory aspects of this industry are very significant, and the regulators are very serious about it, because if the states don't do a good job, then the feds may come in. That basically the whole, I forget what the letter is called, but the letter that Obama had issued, which said hands off the states. It said hands off the states if they are doing a good job in terms of managing this industry.
Well said. And for all you would-be entrepreneurs out there who are serious about going in this sector, remember what he just said. Lowe's was extremely successful, and they literally watched their dreams, if you pardon the pun, go up in smoke. So now I'm going to go on to Ted Bernhardt, who is a securities attorney. And Ted, I'd like to ask you a similar question. What advice do you give your clients on how to manage the regulatory risk?
It's a great question, and I appreciate both of your insights on that. First of all, I think you're referring to the Cole memo, Kevin.
Yeah.
It's interesting because my law practice and our firm, we work with people across the entire spectrum, from the very earliest stage to IPO and the latest stage. But I would say most of the people that first come to us are coming to us in the very early stages, and a lot of them are coming from basically the pre-legalization era, the medical industry, I'm not going to say the black or the gray market or whatever. So the first thing that I raise with people is, before I even get into the details of how regulated this is, what the specific regulations are that they have to comply with, I want them to understand that they need to commit to being regulatorily compliant, that this industry has sort of a Wild West cowboy, a reputation, history, or whatever. That's changing, and you have to change your business models and your compliance mentality in order to do that. So, the first thing I try and convince people of is that if you want to achieve the path to liquidity and the legitimacy of this market, you have to be aware that it's highly regulated and that you have to be committed to complying with those sorts of regulations. Then I sort of turn to talking to them about what the the types of regulations are that they have to deal with. And, you've got federal and state regulations. You've got, people a lot of times don't realize that like things like securities laws apply to them here. And if you're raising money at the startup stage, just because it's from friends and family, you still have to be worried about all that sort of thing. So I kind of try and, in the introductory sessions, I kind of try and flag issues and areas of compliance for them based on my experience with things that trip people up, and get them started to think about it. And then, obviously I encourage them to keep a good dialogue going with me and their other professional service providers, and to recruit people who are familiar with these sorts of compliance risks, and really build out their team to come up with a regulatory compliance infrastructure that will help them. And then, then we sort of dive into the specific details. And the last thing I will say is that I also very much try to give them a reality check that there are actual economic consequences to these regulations. It's not just about whether you go to jail or not. There's a lot of time and energy that you have to spend in complying with these various regulations, and to just be ready for that and build those into your financial models and your projections and your operating plans and all that sort of stuff. So it goes back to what you both were saying, sort of educating people about these risks early on before it becomes a problem, so that you're not trying to fix it in the future, but you're making them aware so that proactively they can deal with them. So that's kind of the approach I take generally.
Excellent. Thank you very much. You just shared some extremely valuable information for those who are paying attention. So that's great. So I'm going to bounce back to Kevin Albert. And Kevin, I'd like to ask, what in your view are the greatest opportunities in the cannabis space? And what do you see as the greatest challenges?
So I think we've largely moved through this sort of early entrepreneurial, start a new company from scratch, at least in the vanilla categories of like cultivation and manufacturing and retail, if you will, dispensaries. There's always going to be more opportunities, and certainly there are going to be new entrepreneurial opportunities in new states that are opening up. But in states like California or Washington or Colorado, I think there are probably enough platforms in that area. And so I think there are two kinds of opportunities. One are the more scientific opportunities, tissue culture, biotechnology, medicine, all of which start to exceed. I know I'm not going to be good at, so that's the kind of exposure I look to get in a fund. I can figure out if a dispensary platform is a good one, or a cultivation platform is a good one. I'm out in California right now. I visited 10 dispensaries and about 6 farms in the last 2 days. But I think the big general opportunity right now is to help rationalize and consolidate the industry. One of the unique parts of this industry, one of the reasons I got into it, is it is funded by individuals and family offices. And even the funds that exist, the 10 to 15 funds, are funded by individuals and family offices. There's no institutional money and there's no private equity. Typically, private equity firms, and there are hundreds of them, as you know, they are the people who come in and rationalize an industry. They take the inefficient companies and bolt them on to the efficient companies and make them bigger, train them how to become public companies. And not RTO, tiny micro cap public companies, but real public companies. And that opportunity now exists for us. And one of the things I'm out here doing in California on behalf of one of the companies I'm involved in is trying to do that with them, trying to make them bigger by finding merger opportunities, basically. Because that's now what has to happen in this industry. We don't need hundreds of small companies. We need, handfuls of big, dynamic, vertically integrated companies, at least in states where vertical integration is allowed. So I'd encourage people to look for opportunities to invest with very capable management teams who have their own house in order, who are ready to help clean up this industry.
Excellent. No, I don't think a lot of entrepreneurs appreciate just how important what you just said about the roll-ups and the M&As. Let's say, for example, a company like Atria, MO, they're not going to waste their time buying anything that's under $1 billion because it's just not going to move the needle for them. So if you could do a roll-up and consolidation, then you actually have real exit strategies. And yes, being a Canadian and knowing a little bit about RTOs, I get where you're coming from. So
Yeah.
anyways, I'm going to bounce now to Ted.
Yep.
And Ted, being a securities lawyer, being a lawyer, I think an attorney, you can appreciate this. I'm sure you'll be able to help us answer this question. I'd like to know, how do you protect IP in a federally illegal industry?
Oh, that's a great question. Yeah, and IP is certainly a huge portion and probably an increasing portion of the valuable assets of the companies in this industry. There are a lot of ways to protect IP, and I could spend an entire day talking about that. But I will give you sort of a thumbnail sketch that maybe has some tips that could help. So all IP is when people say IP initially, they think of usually like patents filed with the federal government or trademarks filed with the federal government. There is an entire world of intellectual property that transcends that and does not necessarily require the federal government's approval. On the hemp side of things, you're getting some more latitude at federal, trademark registrations and things like that. But what I would encourage people to do is, one, for their trademarks, protecting their logos and their brand names and things like that, look to the state protection, because I know at least on the West Coast, up and down the West Coast, there's plenty of ways you can file for protection in California or wherever related to that, and it doesn't necessarily have the national scope that you would with federally, but it's better than being completely unprotected. The other thing that I would encourage people to think about is that there's this concept called trade secrets, which does not require filing with the federal government to protect. Instead, it's the opposite of that. It's not about public disclosure and then protection by the government. It's about how well you keep your secrets to yourself and what sort of procedures you've put in place to protect them. The classic example of that is sort of Coke's recipe for Coca-Cola, or things like that. A lot of people are developing recipes for making products out of cannabis and things like that, but it can even be broader than that. It can include operating procedures and manufacturing procedures and things like that. And so most of my clients, I really encourage them to focus on the trade secrets and putting into place the compliance mechanisms to make sure that your trade secrets are protected and defensible if they ever get challenged. So that would be my recommendation, is sort of the state approach for trademark protection, and then focus really heavily on confidentiality and trade secrets and things like that.
That's great. Thank you very much. Gentlemen, we're coming towards the end. We've got a couple of minutes left. So I'm going to give, starting with Kevin, I'm going to give you an opportunity in a minute or so just to summarize, or just to say anything you would like to say, or anything you'd like to add to the conversation.
Yeah. So in addition to sort of regulatory compliance, one of the things that I was surprised at when I got into this industry, and I'm on a number of boards, so you won't be able to tell which one I'm talking about. It's certainly not talking about the public company, because they're pretty organized in the corporate governance front. But there's this thing called corporate governance, and sort of having policies and procedures in a company. And I've been on the board of a public company before. I've been in a large Wallstreet investment bank where they are, have pretty good corporate governance. And one of the things that struck me as being odd and needing a lot of improvement is a lot of internal processes, like making big investments, making big commitments are still done by the seat of people's pants, without writing up, if you want to go buy something and it's, $20 million, people just kind of have a dinner and talk about it, and they go buy it. They don't necessarily have the money. They might have to go raise the money. And what I'd like to see, and what I'm encouraging in the companies I'm involved in, is have an actual process where you write an investment up in an investment committee memo, and you circulate that, the senior management and to the board, and you get all the brains looking at it, and you get a formal approval to spend anything over, I don't know, $1 million, 500,000, the number can vary depending on the circumstance of that company. And they would also look at things like, do we have this money in the bank, or do we have to raise the money to actually fund that investment? Because if you look back at 2019, most companies got themselves into a jam by, there was this thing called the green rush. People went out and they were buying dispensaries with big notes that came due in a year or two because they didn't have the money, or they were buying manufacturing facilities. I mean, you name it, very large numbers. And then when the capital market shut down, and they shut down very quickly and very firmly, they were unable and basically had big liquidity problems. Now, most companies worked their way out of that, but it was a very costly, because typically you had to go to the party and negotiate with them and issue stock and cash, to settle the obligation. So I'd like to see a lot better corporate governance. And frankly, you can't go public until you get your house in order with respect to both regulatory and corporate governance, in my opinion.
Agreed. We've seen already a few disasters in the public sector. I won't name any companies that didn't get that part right. And Ted, sorry to rush you, a minute or so, if you have anything you would like to add.
I'll make it really quick. So first of all, I got to say, the number of times people come to me with handshake deals for $1 million, $2 million, $10 million investments is crazy. So please don't do that. You'll end up in our litigation department really fast if you do that. But the second thing I wanted to say is I actually kind of want to answer the question that you asked Kevin before. And so now I'll just do that real fast. What are the trends and what am I seeing in the industry? Usually when people ask me that, they're expecting me to say oh, is processing or cultivation or retail, or is that where it's headed? Where's the big? What I think? I think the things that both of you mentioned are really where the growth opportunities are. One, bringing professional management to these industries of people who have experience in other industries, who can bring that expertise here, who also understand and sort of get the social content and the benefits to the community of this. And so recruiting that sort of professional level expertise, I think is probably the biggest thing that you can do. And then the second is I do totally agree with sort of the corporate governance and building the best board that you can around these companies as well, because in order to grow and thrive, I think you need to do that. And I just want to echo one other point. I am actually seeing a huge trend towards consolidation in the industry, and I think that's kind of the next big play, is a bunch of these fragmented smaller businesses that have built a good reputation within the states that they're in because of the regulatory environments are going to start rolling into larger umbrella companies and seeking liquidity on the capital markets that way. So anyway, that's the real fast version, but thank you for the opportunity.
Oh, no, that was excellent. And I'm going to very strongly suggest to Brad that you guys both be invited back. And I would love to do an extended panel if you guys both feel so inclined, because to me, this is among the most 20 minutes and very extremely valuable 20 minutes just spending listening to you gentlemen. And I hope the audience appreciates the pearls of wisdom that you've cast to them. So anyways, time for me to move on back to Dr. Dave, double PhD. And if you guys ever want some, you in the audience, if you ever want to find out an interesting backstory, you should check out his bio. I mean, it's actually incredible. Dave, Dr. Dave, you should really write a book about that someday. Anyways, over to you, Dave.
I thank you so much, Sean. I really do appreciate the nice words. And that is the goal one day, in a couple more years. Also, John, I just want to say you did a great job monitoring that panel. And to the last two speakers, Ted and Kevin, thank you so much. I also learned a lot as well, too. And I really think John hit the nail on the head. 20 minutes is just not enough time. And the information you gave was so insightful to so many people. And I really hope that people took down the notes. Kevin and Ted, just please make sure you check the question and answer part on the bottom of your screen to make sure in case you have any questions. If you want to put any of your key LinkedIn information or any other key contact information, please feel free to include it in the chat room.